Hello, everyone, and welcome back. My name is Greg Furman, and this is the VantagePoint AI Market Outlook for the week of May the 10th, 2021. Now, to get started this week, we're going to begin with the dollar index, but we're going to have a brief discussion here on the U.S. unemployment rate. The numbers. Bit of a shocker on Friday to just about every economist out there. A lot of different reasons popping up why that unemployment number they're saying was so bad. Unemployment benefits being extended to September, people staying at home, not wanting to go to work. I can't speak to that. I am domiciled in Canada, so I'm not sure about that, just what I've heard. But what we can do is look at the U6 number here and really make a decision more on that than just the headline number. Now, the U6 number is the broader unemployment rate. We can see in 2011, if we go back to the height of the COVID crisis at 22 million, we're in 2021, we're 11.1, 11.1 in February. But as this number goes lower, this shows a stronger labor market from 10.7 to 10.4. So I'm not in complete agreement with the way the media is spinning how horrible that report was. I certainly will concede it wasn't great, but I would also respectfully submit that it was very curious that gold started to rally midweek. It definitely suggests that that number was leaked, and that's why gold started to move higher. I knew something was wrong as soon as I saw that. But once again, I think it would warrant somebody to look a little closer into this to say who was actually buying gold midweek, because somebody was, and I find that very suspicious to say the least. But looking at the dollar here, we can see if we go back, we count this back, 1, 2, 3, 4, 5. Right here, we can assess that the dollar had about 3 good days of rallying, and then right after that ADP report, something was wrong. But even the ADP report came in at 740,000 jobs, I think. So really nothing really to worry about there. But then all of a sudden on Thursday, it really started to sell off. And that's when we saw gold starting to spike. Now, Bitcoin went up with it though, too. So we'll talk about both of those in a minute. But for now, going into next week, it's going to be difficult for the dollar to rally. Now, we know with the US dollar cycles that the dollar is normally weak on the Tuesday after the non-farm payroll anyway. So this is likely to accelerate. What I will suggest to everybody for the week, the area that you really want to keep an eye on, okay, is about the 89.80 area on the dollar index. Now, these dollar cycles, there's certain currencies that they affect more than others. The euro, the Swiss franc, the yen, these are the main currencies during that period. The Aussie, the New Zealand, and the CAD, they're more commodity equity based, more so than dollar strength. But when we look at this again, the yearly opening price in the dollar, just remember, despite all the noise and everything we're hearing from the market, the dollar is still positive on the year. Not by much now, but it is still positive. When we look at this from a seasonality standpoint and we go back 1 year, it was 1 year ago to the date that the dollar took a very significant tumble. There is more than enough meat on the bone here to suggest that that could repeat itself. So I'll point out that seasonality because it is important. But what we also have to take into consideration here is that the dollar went lower because of COVID. Gold went higher. The U.S. vaccine rollout is doing well, very well. A lot of the states are back to normal, not even wearing masks anymore. So things are improving. So just remember, the conditions in 2021 are not the same as 2020. I believe that the labor market will recover here, and again with those extended uh, unemployment benefits going all the way out to September, then these numbers are going to be a little bit skewed. So for now, going into next week's trading, the thing we want to see is, can the dollar break down below the yearly opening price and officially turn bearish on the year? We will be able to see that using the VantagePoint key pivot areas. 9110 is the VantagePoint T cross long. If we click on our F8, we can see that we've got our 2-day rule here. Now, I've talked about this before with the 2-day rule. Is what I look for is a 2-day close below that blue line, then a retracement back to the blue line. That level is 90.77. So again, we're closing at 90.21. I would anticipate we will come up and test 90.77. If we fail at that particular level, then the dollar is likely going to push significantly lower going into in the coming weeks. Now, if that is true, then I would flash forward us here to gold. Now, again, I am not a gold buyer until we clear that very important yearly opening price, which is 1904. Gold is still has, if you bought gold on January 1 here, guys, you've been losing money the entire year. That's a simple point of fact. So when I'm going back and I look at this from, once again, 1 year ago, gold did have a very significant rally last year at this time because of COVID, though. Remember, if we didn't have the international global lockdowns, COVID spreading, gold would not have gone to those levels. So it's left to be seen still, is gold going to turn bullish on the year? In my respectful opinion, again, I would not personally be a gold buyer until it's actually positive on the year. Am I missing something between the current price and 1904? No, actually I'm not, guys, because again, there's a number of different there's several positives for gold, but there's just as many negatives. And again, I believe that the US economy is going to recover, the jobs are going to recover, and that will improve as we start moving along towards September. Now, right now with our MA diff cross, we do have a clear buy signal on this, but we've got to get through. We've still got some very stiff resistance up here, 1858. I think it's inevitable that we're at least going to test that level very early in the week, but we want to watch the Vantage Point indicators very closely for potential failure. Now, the T-cross long is all the way down here when we look at this at 1781. The further we move away from that level, the more likely it is we're going to retrace back to it. When we click on our F8, we can see we've got a huge gap in price off of there, 1801. So I would anticipate that we are going to come back down to these two levels very early in the week, probably by Wednesday. And we want to see if this level at 1801 is going to hold. If you're a gold buyer, then that's the area you would focus on to begin the week. Now, the Vantage Point predicted low is at 1816. So another way that you can do it for next week is say, okay, I believe that gold is going to go higher to 1858, so I would target the Vantage Point predicted, the distance between the Vantage Point predicted low at 1816 and that long predicted, the predicted moving average by itself at the 1801 area. So if you are a buyer, that's the area you would target. Just remember what I've said. Adhere my warning, guys. 1904, we are still negative on gold on the year. Just be very, very cautious. Now, I'm sure the Fed is sitting back in his chair, giggling and saying, I told you so here. So obviously, the equity markets love that number. And because the Fed is not going to hike, or at least that's what they believe. So right now, again, to begin the week, we want to target some levels here. Our T-cross long is 4165. 4165, we're long while above this level. We've had multiple retracements to it on that dollar weakness this past week, but we've bounced out of there each time. Now, on this push below here on the Tuesday, this is this classic Tuesday reversal that I often talk about, but you'll notice we did not close below that level. Try and ignore the intraday volatility, the noise, and everything else, but always watch where we close. Are we closing above or below that Vantage Point T-cross long? We closed above. That led to another 3-day rally. But again, in my respectful opinion only, I've been in these markets for 25, 30 years now, and I know when I smell a rat here. And I'll eat a bug if I'm wrong here, guys, but I'm telling you, somebody leaked that number. Because stocks started moving up heavy, but gold was the one I was watching. So once again, we did have a verified resistance at this high of 42.18. So I'm still support longs even at this level, but we have to be a little bit more cautious with longs. Now, our predicted low to start the week, again, is 42.11. So we want to match that up to the Vantage Point predicted moving average. That's coming in at 41.98. So the way I would look at this, each day is the way I look at this actually. This is just because this is an outlook, not a recap of something that already happened. So it's a trade setup that you can replicate in your own trading. So at the predicted low is 42.11, and the Vantage Point predicted moving average, the long predicted, is 41.98. That's the target zone. And we know that Monday and Tuesday Monday is volatile, Tuesday is a reversal day. Then by midday Tuesday, we start to get a real price, a real feel for the market. So these are the levels that you would want to target. The indicators in VantagePoint are fully supportive of longs on the S&P 500. The fundamental picture obviously is also supportive of further equity gains. It's very difficult even for me to believe that the S&P is at 4,200 and we just keep making these new highs. But to the credit of the VantagePoint software, it's been an accurate call. And I haven't always agreed with it, but it has been accurate, very accurate. Now, as we look at oil for next week, now oil may have to take a step back here. Can it continue to advance with the stock market? Potentially, but the market could also interpret this as that the global economies are not going to take off the way they thought they were going to, and there may be less demand for oil. So oil will still follow the S&P 500, but some of the critical levels we have to watch here. There's a very different signal here between the S&P 500 and oil. When we look at oil, we have an MA diff cross right here. The medium-term trend against the longer-term trend is not strong. We have very powerful verified resistance that has not been able to break at 66.52. So now we have to sit back and see, is the market believe that labor report? Does the market now think that the economies are not going to take off the way they previously did? That could let some of the steam out of some of the air out of oil, to say the least. So once again, keep a very close eye on the critical level here. And when we look at this, we closed on Thursday below that predicted moving average at 64.85. On Friday, we rallied back up, but we still closed below that blue line. Our MA diff cross is our neural index, but our RSI is predicted RSI is still telling us we have momentum here. So a very mixed signal, but watch this level. All of your activity to start the week is going to be around 64.94. So we're going to be watching other commodities and we're going to be watching the S&P 500 if we are trading oil, okay? Now, when we come up here and we look at one of my favorites, as you guys probably already know, I am in the exact opposite camp of, and I have been for a very long time, as Warren Buffett and Berkshire Hathaway on Bitcoin. And again, it's my understanding now that the people that are not trading it are now having special investment teams set up to trade it. So very confusing things coming out of Berkshire Hathaway and some of these other big investment firms. But once again, Bitcoin's still having a good week here, guys. So when we come back here, 1, 2, 3, 4, 5, we came down, but then we fully recovered. And again, using the VantagePoint verified support levels are fantastic because they're a non-indicator. They simply identify support and resistance zones or failure points in the market. So from here, what I'm seeing is that we have good support on Bitcoin at that low of 52,418. We've got buyers coming back in. We just need to clear this particular level here at this high of 58,931, and then we would likely look to return back towards the 65,000 mark. Now, just remember, like the way I look at people will argue that there's no intrinsic value with Bitcoin. Well, there's no intrinsic value with gold either, guys. But the large difference between Bitcoin and gold, in my respectful opinion only, is that one is going to be a form of payment, just like a US dollar, a Canadian dollar, or a euro. So it then has value because we say it does. We say that gold's worth $1,800 an ounce. That's because that's what we're willing to pay for it, right? But the difference between that and Bitcoin, in my view, is that we're going to start being able to make payments on cars, on maybe houses, I don't know, but food, beverage, all these things, there'll be a form of payment. Whether it can maintain these lofty levels will have to be seen, but for now, it still remains bullish. The indicators on VantagePoint very mixed. An MA diff cross down, which was accurate, but the neural index is holding green and the RSI is above 50 and above 60, which suggests that we still have further upside potential. And after that labor report, that's not going to help the US dollar against Bitcoin. Now, as we move into some of our main Forex pairs for next week, looking at the Euro-US pair, once again, you can see I've highlighted this bar right here. This was to start the week. We came right back up here, and then we sold off 3 good days of selling. But then the ADP report came out on Wednesday, and gold started to spike. something very odd was happening, and I saw it clear as day as soon as gold started to rally, and really there was no reason for gold to rally on a technical or a fundamental basis, based on the previous economic data, the recovery and the anticipated recovery in the labor market, unemployment rates, all of these things are improving. So the euro goes lower with gold, but then it turns around. And this is where, again, when we look at this in the market, the neural index turned from red to green as gold was rising. So the one thing you want to understand with the euro currency, if you're trading it, it is a very high correlation to gold. So if gold is going up, then the euro is likely going to follow that. That is what happened. But when we break this down again and we click on our F8, you can see that trading here for the week that we immediately started the week. We're in last week's weekly outlook. I suggested that exact level for shorts in the video around the 120.70 mark. Then we sold it again on Tuesday at the exact same level. Then on Wednesday, we're starting to have a bit of a problem here. It's still down, but it came back up here, and there's the warning sign for me, closing above that predicted moving average. That was an absolute problem with the neural index. And then, of course, it led to this big spike. So the euro, once again, here, guys, is no different than gold. If gold continues to advance towards its yearly opening price, the euro currency will do the same. 122.40, keep a very, very close eye on this. We've had failures at this level before in this very calendar year. So again, you can see it right there. The exact date where it retraced back up to the yearly opening price and then crashed even lower. So be mindful of that, guys, around that 122.40, 122.38. Be very, very cautious at that level. Now, as we go into the pound dollar for next week, once again, the pound is moving up. You can see that I've identified we had the move up on Monday in the bank holiday, and then we were basically down the entire week on the pound. It just couldn't seem to get going. It couldn't get past where its high was on Monday, and it just kept wandering around. But this is the level you guys want to keep an eye on for next week. 140.15. Now, there is obviously a dark, ominous cloud hanging over this pair, this very heavy verified resistance zone. So if we start penetrating into this dark red area, then again, the pound, if it can clear 140.15 and close above it for 2 days in a row, we should be able to get up towards this 142.34. But the Bank of England is just as mixed as the FOMC. So there's no guarantee here, guys. Okay. Now, what I will warn you of too with the pound dollar is that, like Euro US, the real driver behind these two is, believe it or not, Euro Great Britain. So if Euro Great Britain rallies, if gold rallies and then the euro rallies, then that's going to push Euro Great Britain higher, which may pin Great Britain US below these levels. So keep an eye on that pair. Right now, our key levels in the VantagePoint software, you can see we've springboarded, literally springboarded off the T-cross long on Friday, 138.94. But always remember, that could have gone either way. If that unemployment report came out, what they were looking for, like 1 million jobs or even 800,000 or 900,000 jobs, and then upward revisions to the previous month, the pound dollar could have easily broken down below there. That's why you want to always avoid those type of event risks, because it's a crapshoot. Like, they're forecasting 1 million jobs, they get 266,000. Nobody can anticipate that something like that happening. That the number being that far out, right? So, but this is the key level to watch. If we can't break through this level and close above 140.15, then the pound may be in a little bit of trouble, even though the euro US is rising. So when we click on our F8 and we look closer at this to begin the week, we've got 139.32. We have the Vantage Point predicted low at 139.20. So again, all of it, what in this particular case, that if you want to buy the pound dollar, yes, there could be a breakout play, tagging a limit order at say 140.30, 140.25, but that's a high risk long trade at that level. I would prefer to wait and do this setup that I've discussed in the VantagePoint Live training room and on here, is when the predicted low and the predicted moving average is in the same zone, then that's the area we would target. We want the trades to come to us. We don't want to chase price here, guys. Let them have their fun up at 140.15 and see, because like I said, if it stays above 140.15, you can buy up there anyway on the break of that level. But I want to see it closing above that level 2 days in a row. Then this very long-term resistance area will potentially become a long-term support level. So resistance has to flip to support. We are not there yet, okay? Now, the dollar yen, once again, it didn't have a bad week either. You can see I've outlined this line on this bar right here. We came down at the end of the day on Monday, and then we basically went up to sideways for the next 3 days or so. But then something ominous or funny was going on with gold, and next thing you know, the dollar yen's tanking. Remember, the Swiss franc, the Japanese yen, and the euro, these currencies follow gold. So if there's any upward move in gold, there's going to be an upward move in those currencies like the yen. So that's what's pushed it lower. When we look at this right now, our medium term crossing our long term predicted difference is down, and it's down hard. So again, it looks at with the break of the 40 level in the RSI, the only other potential savior for this pair is that if stocks really rally hard in a risk-on environment, that still doesn't necessarily mean it's going to favor the yen because of that correlation to the stock market. So again, we've got to keep bringing gold back into this scenario to see if, because really, if the stocks are going up this hard, like the stocks have been doing prior to COVID, that was killing gold. That wasn't helping gold at all. So again, we want to watch gold if you're trading this and the S&P 500, but our key level 108.85, we closed below that. Now we need to see if we can hold below that. So if we click on our F8, we've got our vantage point long predicted here at 108.92. We've got our predicted high at 108.82. So all of our resistance is clearly identified if you're using your software this way. So we've got our T-cross long, our long predicted, and our predicted high all in that same area for Monday. That's the area you want to watch, and if that area holds, then the dollar yen is likely going to take a run at this lower 107.48 area. Now, with the U.S. Canadian pair, uh, big move down on the Bank of Canada. I've repeatedly given warnings on here that the Bank of Canada's numbers are lagging. They're saying the Canadian economy is booming, it's coming back. That's just not factual. Ontario has been shut down. We're still shut down and locked down. The Bank of Canada takes lagging data. The problem here is what I will let everybody know is that we open, we close, we open, we close, we open, we close. We keep playing this game here. And it's throwing the Bank of Canada's forecasts off too, because the economy is booming 1 minute and then it comes to a grinding halt the next. So this is causing confusion. In my respectful opinion, we have moved way too far, way too fast on this pair. And it's been caused not by the governments, not by the people, by the Bank of Canada making a flip comment when they shouldn't have made that comment, saying that everything is fine in Canada, no COVID here. That is not true. Again, Ontario, the most populous province, is in complete lockdown, stay at home order. The economy has come to a complete halt. So the Bank of Canada, when they made that comment, the economy was on a partial lockdown and things were improving, and then it went sideways, completely went the other way. So the Bank of Canada's forecast, we need to put that aside, at least for the time being. Canada does have a good vaccine rollout plan in progress here now. That should help, but it's going to take time here. And now that there's a lot of slack in the labor numbers. So we have to see. But when I look at this for next week, the long predicted, I would anticipate at the very least that we are going to come up and test the 122.33. The Canadian labor report from Friday was absolutely horrific. The unemployment spiked all the way up to 8.1, a loss of 200 and some odd thousand jobs. But that should turn around by potentially July, August, and we get the slack out of there. But for now, the market's going to have to rethink this a little bit after looking at that labor, because as bad as what they're saying the U.S. labor report was on Friday, the Canadian one was just as bad, if not worse. So we will be looking for a retracement here. But the market, this pair is moving into an aggressive downtrend, to say the least. Now, with the Aussie and the New Zealand, once again, you can see that the Aussie and the New Zealand, did nothing all week. We came up here and then we were down for basically 3 or 4 days. And then as gold spiked higher, again, in my view, I'm going to keep saying this, is that my view is that there's corruption at its finest. Somebody leaked that ADP report, excuse me, the non-farm payroll number. Somebody made a lot of money off that. And, because again, when you look at the fundamentals, but the Aussie obviously responded very well. Now we're getting all tangled up in this zone here. This predicted or this verified zone high is 78.49. If we clear this, you can see that we have very, very little resistance until the 80 cent mark. So a potentially very good week to be buying the Aussie. And if we put the piece of the puzzle together with intermarket correlations, the Aussie loves it when the stock market, the S&P 500 goes up, but it also tends to like it when gold goes up too. But the higher correlation, in my view, is the S&P 500. So if the S&P continues to advance, we can break through here. We have a fresh buy signal with our MA diff cross, our neural index is on board. Predicted RSI looking great. We just have to clear this hurdle at this high of 78.49, and that will open up the door to potentially 80 and beyond. The same exact thing applies to New Zealand US here, guys. It's the same trade. You can see almost the exact same signal. We just need to clear that high of 72.86. And once again, that opens the door to 74.64 and potentially beyond. So it's just a question now, guys, is how is the market going to respond to that labor report? Are they going to look at that U6 and digest it slightly different the way that I did? Or are they just going to fire at will and start selling US dollars based on the Fed? I believe it'll be a bit of both here. So we're going to have a choppy week ahead, but I think there'll still be some very good opportunity. So with that said, this is the VantagePoint AI Market Outlook for the week of May the 10th, 2020.